Welcome to the daily insights that matter. Now, India experienced a significant decrease in the retail inflation in the month of April as the rate dropped from 5.66% in March to 4.7%. Now, what is noteworthy about this is that it is the first time since November 2021 that the inflation had fallen below the critical threshold of 5%. Now, bringing further relief, retail inflation in India continued to decline in the month of May, reaching a level not observed since April 2021 at only 4.25%. Now, this consecutive decrease for the third consecutive month falls comfortably within the target range established by the Reserve Bank of India. Now, like the preceding 3 months, the CPI inflation for May followed a downward trend surpassing expectations. Now, this is attributed to the favorable base effect and a continued decline in the food inflation. Additionally, specific components of the CPI basket such as clothing, tobacco, industries, fuel and light, health and others also displayed noticeable signs of easing price momentum, with their respective indices experiencing a similar decrease. Now, over the past few months, there has been a substantial decrease in the rate of price rises, reaching the lowest level seen in 25 years. Now, this positive development can be attributed to two key factors. First, a favorable comparison to previous prices, and secondly, a decrease in the prices of essential items, particularly the food. Now, as a result, we've experienced some relief from the persistent and high price pressures that we've been seeing. Furthermore, we can anticipate further relief from the issue of rising prices due to a combination of factors which include declining commodity prices, the delayed impact of the measures taken to tighten the monetary policy, and the continued influence of the favorable comparison to the previous prices. Now, India's industrial production growth rebounded to 4.2% in the month of April due to robust growth in manufacturing and the mining sector. Now, industrial production measures the change in the total inflation-adjusted value of output produced by manufacturers, mines and utilities, and it usually comes with a 6-week lag released by the MOSPI. Now, after declining to a 5-month low of 1.7% in the month of March, the IIP data in April rebounded to 4.2%. When compared to a year ago period, IIP growth was recorded at 6.7% in the month of April. Now, when we look at the sectoral breakup, manufacturing sector, which accounts for 77% of the index, witnessed a healthy growth of 4.9%, as well as mining at 5.1%. Electricity output showed weaknesses and contraction for the second straight month in a row. Now, within use-based classification, the output of consumer durables was the only dragger, with the infrastructure, construction goods and consumer non-durables showing double-digit growth. Now, going forward, several factors such as the central government's capex push, improving private sector, RBI's decision to hold interest rates and the inflation well under control bodes well for the capex revival within the economy. Additionally, a pickup in the domestic consumption, including rural consumption, remains critical for growth in the industrial output. However, the global economic uncertainty and the weak external demand are likely to persist for some time. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com